If you're selling into Texas, figuring out their sales tax rules can be difficult. And here's the thing, Texas has one of the more nuanced thresholds out there, plus 3 additional factors that easily create confusion. So if you're confused, please don't feel bad, because once each piece is explained clearly, the logic actually holds together. We've walked hundreds of online sellers through exactly this, and today we're going to break down Texas Economic Nexus in a way that actually makes sense so you know exactly where you stand. Economic Nexus is the idea that even if you've never set foot in a state, you can still owe sales tax there, just because of how much you sell into it. After the 2018 Supreme Court decision in South Dakota versus Wayfair, states were given the green light to set their own thresholds. Most states set them at $100,000 in sales or 200 transactions. But Texas went a different direction. Texas set its threshold at $500,000 in gross sales with no transaction count. So there's no 200 orders rule. Just one number, $500,000, and it's based entirely on what you sell into the state. That higher threshold means a lot of smaller sellers aren't in scope yet for Texas. But if you're growing, this is an important number to have on your radar. Here's where Texas gets a little more nuanced than most states, and this is the part that people tend to get wrong. Most states use a clean measurement period, the previous calendar year or the current one. Texas uses a rolling previous 12 months. That means the measurement window isn't fixed to January through December, it shifts every month. So rather than a once a year check, the threshold is evaluated on a monthly basis. Each month, the question is the same. Do the trailing 12 months of Texas sales add up to $500,000 or more? And here's what counts toward the number: gross sales. Wholesale and retail combined. It doesn't matter whether the buyer is a business or a consumer. If the goods are going to a Texas address, those sales count. Once a seller crosses the threshold, Texas provides a grace period before registration is required. Specifically, the registration deadline is the first day of the 4th month after the month the threshold was crossed. Because yeah, why not? But let's make that concrete. Say you look at the 12-month window from March 1st, 2025 through February 28th, 2026. And that total crosses $500,000 for the first time. February 2026 is your crossing month. Now, count 4 months forward from February. March is 1, April is 2, May is 3, June is 4. The registration deadline is June 1st. That's the deadline. June 1st. The reason the monthly measurement window matters is that the grace period clock starts from the first month the threshold is crossed. So identifying that month accurately is what determines the deadline. The most common mistake we see is sellers looking only at retail sales into Texas and concluding they're under the threshold without accounting for wholesale. Because Texas requires gross sales. This includes both wholesale and retail. So a seller with $300,000 in retail sales and $250,000 in wholesale sales into Texas in the trailing 12 months has crossed the threshold, even if that retail number alone wouldn't have gotten them there. The takeaway is that gross sales, Texas addresses, trailing 12 months, all of it counts, wholesale and retail alike. So just to be clear, Texas has a higher bar than most states, but the rules are clear. The threshold is $500,000 in gross sales over a rolling 12-month window, and once it's crossed, the registration deadline is the first day of the 4th month after. And if you think Texas is a challenge, just wait until you hear what you need to do for sales in Florida. And for more on that, check out this video. And remember, when in doubt, always consult with a sales tax professional.